Hello, everybody. It is Michael here from My Retirement Trading, and I just got done filming episode number 3 of my Transparent Trader Confidential series featuring finance YouTuber Ryne Williams. And it was an amazing interview, and I cannot wait to share it with you all. So let's get into it.
In the next couple of years, I'm planning on becoming a billionaire. We'll see if it plays out. No, I'm joking. But yeah, I don't know. Personally and professionally, I don't know. I hope that I can still do the things that I'm doing today. And I hope that between now and the distant future, I can just continue to make progress along the way when it comes to my YouTube channel, when it comes to my portfolio, when it comes to health and fitness. Outside of this, I'm really into that, into running and lifting weights. I hope I can continue making progress there. I'm a new parent, but we have a 7-week-old baby, so I'm hoping I can be a better dad down the road than I am today. Not that I'm bad, but I want to keep making progress there. I want to be a better husband. Any opportunity to make progress in any area of my life. That's really what I want. I just want to keep making progress and just keep getting better with time in all departments.
Hello, everybody. It is Michael here from My Retirement Trading. And today we have a very special guest. But before we get into this, I must state that none of this is financial advice or a recommendation, and it is for entertainment purposes only. With that being said, let's welcome our special guest, a finance YouTuber with over 90,000 subscribers. Let's welcome to the channel, Ryne Williams.
Michael, thank you so much for having me on. This is our fun fact, guys. This is our second time going through this. I screwed it up a moment ago, but we're going to try it again. And I'm stoked to be here with you tonight. So thank you for having me on.
So, Ryne, introduce yourself to everybody and how you got into investing and what was your first purchase.
Okay, so as far as introduction, I mean, you pretty much hit the nail on the head. I make YouTube videos talking about investing, primarily dividend stock investing. That's my jam. And I got into this, I think I'm coming up on 6 years in my investing journey. And I first seriously got into it, like right before the pandemic hit. I think I made the decision to start investing consistently like January or maybe even February 2020. So right before, everything hit the fan. And I don't know, since then, I started doing it, started learning about it on YouTube, absolutely fell in love with it. At some point decided to, start making videos of my own, and the rest is kind of history. But I would say pretty much that entire time, maybe with the exception of the first few months, I've been focused specifically on investing in dividend paying stocks. Before that, I was just floundering with no real plan or any coherent direction. But man, as far as the first purchase goes, let me see if I can remember. I truthfully don't know. I don't really remember what my first pickup was, but I do remember when I first got into this. I really went gung-ho, just adding a ton of different companies at once because, you get into it, you start watching the YouTube videos, you learn what other people are doing, and then with not knowing any better, you decide to start buying all those stocks that other people are buying that you're seeing in these videos. And so I really came out of the gate way too hot. And I probably right off the bat, I think I had maybe 20 to 23 different positions in my portfolio, all individual companies. And these were going to be ones like Coca-Cola, Procter & Gamble, Realty Income, 3M, Pfizer, Johnson & Johnson, Starbucks was in there. Trying to remember some of the other ones. But anyway, it was a list of those kinds of stocks. Some of them that I still have today. But those were some of my earliest purchases. And like I said, I came out of the gate very hot. But those were, kind of my earliest foray into trying my hand at this whole investing thing.
So, you said that you consider yourself a dividend investor then?
Yes, sir.
Okay. How has your strategy evolved since you first started?
That's a good question. I mean, like I was saying, when I first got started, I really had no idea what I was doing. I had no background in finance. I didn't go to school for this stuff, so I was a blank slate. Um, and so when I first got started, I I really was just following the things that I was seeing on YouTube. And upon just kind of getting deeper into that rabbit hole, that's when I discovered dividend investing and even learned what a dividend was. And that's what led me to want to buy some of those stocks that I just mentioned a few moments ago. And I would say for the most part, my strategy has been pretty consistent through and through. I would say that the evolution has come in the form of just knowing what to look for in a good investment and knowing what makes for a quote unquote good business or a great business. And so I've really had to learn a lot over these last few years, things like accounting or even about competitive advantages or even how human behavior and psychology plays a role in all this investing stuff. And I think that that's really been where the evolution has come from. But from the very beginning, I've really only invested in, maybe with the exception of a few months, but um, for the great majority of my investing journey, I've only invested in dividend paying stocks. And one of the reasons for that, a big reason for that, especially at first, was just wanting to get that cash flow, wanting to get that passive income. And that's certainly still true today. I mean, nothing brings me more joy than seeing those dividend paychecks come in. I actually love that more today than I did when I first got started. But I think as time has gone on, also, just the presence of a dividend, the fact that a company pays a dividend, there's also a philosophical component behind it that I think keeps me only investing in dividend paying stocks. I like having that cash based relationship with the companies that I own. It's obviously a dividend's not guaranteed, but I do think that maybe makes the management team a bit more accountable to the shareholder than a company that doesn't pay a dividend. So I think that there's that component to it. And I think that at the end of the day, the only way a company can pay a dividend or pay a growing dividend is, if they are profitable and growing their sales and their earnings and free cash flow along the way. And I think at the end of the day, those are the only kind of companies I'd want to invest in anyway. So I think that this is kind of part of the evolution, is understanding that really that presence of a growing dividend is going to narrow down my investable universe to just companies that are actually profitable and growing. So maybe a bit more financially responsible than some others out there might be. Hopefully all of that may make sense. I know that's kind of a roundabout way to answer the question.
So, being that you're a dividend investor, do you chase yields, or you just go more after the solid companies, or what?
No, I mean, I say I try to stick to the solid companies, but and that's, I guess that's another thing that has come. That's been another part of this evolution. Maybe earlier on, maybe I did pay a bit more attention to a stock's dividend yield. I mean, I still look at it obviously when I'm looking at investments, but I certainly don't buy stocks and do not recommend people buy stocks just because it has a certain dividend yield. Or also, I also wouldn't suggest that people stay away from a certain stock just because it has a certain dividend yield. A lot of people like to poo-poo on certain companies that have low starting yields, but I think that's a mistake, because you need to look at the underlying business from a holistic point of view. So I wouldn't say I really ever chased yield. Earlier on, I did probably emphasize it a bit more than I do today. And really, for me today, what's important is just that there is a dividend and that dividend is growing. But I think that can come in all sorts of shapes and sizes. I think you've got the high yielding stocks that maybe don't grow their dividends as aggressively. On the other end of that spectrum, you've got lower yielding stocks that maybe grow their dividends quite aggressively. And in my portfolio, I've got a combination of everything on that spectrum. And I like to think that at the end of the day, that combination leads me to have a pretty well balanced portfolio. That's something that's important to me, or at least that's what I shoot for.
You trade any ETFs that are dividend ETFs, like an SCHD or anything like that?
Yeah, actually, SCHD is the largest position in my portfolio. So I have two accounts. I've got a taxable brokerage account. I have my Roth IRA. In the taxable account, it's all individual companies. And over in the Roth IRA, it's just ETF. So in my Roth IRA, I've got a split between SCHD and VOO. I just dollar cost average into both of those every single week. But over time, just through that dollar cost averaging, those two have become the largest positions in my portfolio. Yeah.
Do you do any growth investing at all?
I mean, I that's kind of an interesting question. I actually think that touches on something important. So, and excuse me as I stand on my soapbox about this. I'll try not to turn this into a tangent, but I think you hear the labels often get thrown around, like growth, or even myself, I use them. Dividend, I call myself a dividend investor. And I think that there's this idea that growth and dividends are mutually exclusive. Like you can only have one or the other. And I try not to put myself in either box. Yes, I say I'm a dividend investor because I only invest in dividend paying stocks, but still a lot of those companies or all of those companies are growing. So that's just another aspect of I think having a well-balanced portfolio. And so, yeah, growth is certainly an important part of the equation. But I wouldn't say that I buy certain stocks just with the expectation that they're going to explode in value or see crazy momentum to the upside in the next 6 months or 12 months. Really, at the end of the day, what I'm looking for are companies that are growing so that our growth in that regard, growing their sales, growing their earnings, growing their free cash flow, and subsequently growing their dividend as well. So I think you can have your cake and eat it too. And just a few examples of that in my portfolio are like Visa. Maybe it doesn't have the highest starting yield, sure, but I mean, the company is undeniably a solid grower. That's true from top to bottom in sales, all the way down to free cash flow and also to the dividends. So I think it checks both boxes. Snap-on's another example for the same reasons. Williams Sonoma, Lowe's has been a great example of that. I mean, even Procter and Gamble, I think it's not been the most aggressive grower, but it's been steady and consistent. So the growth is there, just kind of comes at a different pace.
So, do you have a favorite index like the S&P or the Nasdaq?
I'm not particularly, I don't feel super strongly about that, but like I said, I do invest in the S&P 500 every single week. I dollar cost average into VOO and the Roth IRA. And, I think that pairs really well with SCHD, which is the other fund, in that portfolio. And if we want to, put things in boxes, growth and dividends, I think that just by investing in those two right there, you are getting the best of both worlds. And so, if I had to give an answer, yeah, I like the S&P. I don't think you can go wrong with it.
So, when you said you trade every week or buy every week, or do you wait for red days, or you just put the money in as soon as you have it, or?
Yeah, that's a good question. I don't know that I have a super strict strategy for that. Every single week, the money gets transferred from my checking account to my brokerage account and also to the Roth. The Roth IRA is timed, so every Wednesday it'll make the purchase, rain or shine, up or down, whatever. But over in the taxable account, it's a bit more loosey-goosey, and I kind of, I mean, if I'm on the ball, if I'm paying attention, then I'll make my buys on Monday. Sometimes it's Tuesday, but sometimes it's like I just get busy or don't think about it or don't get around to it. And sometimes it's I don't make my buys until Thursday or even Friday by the end of the week. It just kind of depends what's going on. I mean, ideally, I'd like to buy when on days that are red, but you don't always get those opportunities. And so I just look for the pockets of opportunity in my portfolio. And typically there's at least one. Like, for example, I've been buying stocks like Zoetis. I've been buying Watsco. I've been buying Vici Properties. And these last couple of days, so far this week, all three of those, well, maybe not Vici, but the other two have actually are up quite a bit. They've had a pretty nice week so far. So it's been green for these last couple of days, but zooming out over the last month, even year to date or over the last year, the stocks are down. And so, I think there's still good buying opportunities, even if there is a day where the share price is going up. So I kind of try and zoom out beyond just what's happening on the day. And I look more at maybe what the share price has done over a longer period of time to maybe help gauge where it's at. And also in relation to my own position, if I'm down on a position like I am with a couple of those right there, then it's a good time, it's a good opportunity for me to buy more shares of those because I can lower my average cost per share. I can increase my margin of safety by buying when the prices are lower and bringing my average cost down. With Zoetis, I think I just this month in November, I think I've taken my average cost from about $152 a share down to, I think it's about 146, 147. So, it's made quite a difference being able to buy the dip. And obviously throughout the month, there have been days where it's been up, there have been days when it's been down, but on a net basis, it's bettered my position, and on a net basis, it's lower than my where my shares are at. So it's a good time to buy.
So, what do you think of the covered call ETFs that are out these days, like a JEPQ or a QQQI?
Well, those particular ones that you mentioned, I think they're fine. I used to own Jeppy in my portfolio back in the day, but I've kind of sworn off the covered call ETFs. I think that there's some tame ones. I think the ones that you just mentioned there are fine. They're pretty straightforward. Like I think you said QQQI, JEPQ. I mean, even SPYI, like I said, are pretty straightforward. They're just writing simple covered calls on like the NASDAQ or the S&P 500. And I think that's pretty straightforward as far as, option strategies go. I do think, and this question's honestly kind of a can of worms for me. Um, I do think that there are some pretty not great covered call ETFs, some very sketchy ones. Honestly, like I said, it's a can of worms, and we don't have to go through the whole thing. I probably don't even have to name the ones. I'm sure everyone watching kind of can name them themselves, but I think that there's some pretty bad investment products out there.
So, if
And
you were
so,
going to name your top three stocks or ETFs or both, what would they be?
let me think about this for a sec. So, I'll stick to just individual stocks. I think I think that's a bit more fun. So as far as individual companies go, I would easily put Visa in there. Easily put Visa in there. Let's see. One that I do not own, but have been dying to own. I call this one my great white whale. I've been chasing this one for like 3 years. Is Rollins, ticker symbol ROL. They're like one of the world's largest pest control companies. Great business. I would definitely put them in there as well. Um, Let me think. I really love Vici Properties. I live here in Las Vegas, and so that company's pretty near and dear to my heart. It hits close to home, pun intended. So, do I want to put that one in the top three? I don't know. I'm kind of struggling to come up with a third. I think I'll just leave it at those two with Visa and Rollins. Maybe Vici is another one in there, but certainly Visa and Rollins.
So, what if you only had to choose one investment? What would it be?
Well, it would be Visa. Yeah,
Okay.
absolutely.
And you want to stay away from the ETF question or?
Well, no, I mean, we can get into it. If you can ask whatever you want, I'm an open book. I just didn't want to go on a tangent talking about covered call ETFs because like I said,
Right.
it's a can of worms. You get me started talking about the yield max funds, and we'll be here all night.
So, well, just a regular ETF, do you have any favorites that if you
Yeah,
only had to choose one?
man, if I really had to choose one, that is a really tough question. I didn't think it would be, but yeah, I mean, it would be between SCHD and VOO, and I like them for different reasons. I think they both have different things to offer. I got to go with SCHD. I've just got to do it. I love it. It's the largest position in my portfolio. I'm a dividend stock investor, a diehard dividend investor. So how could I not? How could I not pick SCHD? And I know, guys, everyone watching, SCHD, its performance has not been great this year. It's been a good fund to me. It's really treated me well as far as growing income goes. I think over a long period of time, it will continue to be a good investment. So I'm happy to own it and continue buying it. We'll just let's give it to SCHD.
All right. And what do you think about Bitcoin and are you bullish on it?
I'm probably not the best person to ask about Bitcoin because I truthfully haven't spent too much time with it. It's one of those things. that I really struggle to wrap my arms around it. And I've tried to read. I've read a couple of books. I was looking at my bookshelf over here. I've read a couple of books on like the whole Web3 space and blockchain and obviously cryptocurrency is a part of that. But man, it's too over my head. I think when it comes to Bitcoin, the tough thing for me is that the tough thing for me to understand about it is what gives it value beyond just what others are willing to pay for it today. I think that this just how people feel about it is what it's worth. And I don't know that there's necessarily anything wrong with that. There's plenty of other things in the world that are like that. But for me personally, investing in companies that create a product or service and sell that and have sales and profits and distribute some of those profits, for me, that's just so much more straightforward. It's so much more tangible for me than something like Bitcoin. And there's no denying that people have made just obscene amounts of money in Bitcoin. But it's not really for me. I just don't, I guess and I'm saying this as someone who truly doesn't understand it that well. So forgive me, guys, but I just don't get it. I don't get the value of it.
So what does the future hold for you personally and professionally?
Well, in the next couple of years, I'm planning on becoming a billionaire. We'll see if it plays out. No, I'm joking. But yeah, I don't know. Personally and professionally, I don't know. I hope that I can still do the things that I'm doing today. And I hope that between now and the distant future, I can just continue to make progress along the way when it comes to my YouTube channel, when it comes to my portfolio, when it comes to, health and fitness outside of this. I'm really into that, into running and lifting weights. I hope I can continue making progress there. I hope I can, be a better, and I'm a new parent. I was telling you this before we started recording, but we have a 7-week-old baby, so I'm hoping I can be a better dad down the road than I am today. Not that I'm bad, but I want to keep making progress there. I want to be, a better husband. Any opportunity to make progress in any area of my life. That's really what I want. I just want to keep making progress and just keep getting better with time in all departments.
So where can people find out more about you and reach you at?
So you guys can check me out on YouTube. If you just search my name, Ryne Williams, it's Ryne. You can find me there. You can hit up my website, retirewithryne.com, and sign up to my email newsletter. I'm putting out newsletters every single week, just writing about dividend investing, my thoughts on the market, my thoughts on random gibberish, sharing portfolio updates on my dividend income, answering your questions as well. That's all happening in the newsletter. So those two things, follow me on YouTube, subscribe to the newsletter, and also follow me on Blossom as well. If you're not on Blossom, you definitely should be, because it's a great, great place for investors. So definitely check me out there as well.
Well, I'd like to thank you for coming on the channel for the interview and everything. And everybody check out Ryne on Blossom and on YouTube and everything. And with that being said, until next time, we will catch you all later.